I'm going to tell you about the breakout strategy that'll make you profitable. That breakout strategy that you need to make you money in the markets. And that's only on the system. We have to separate the strategy from the system. I've told you this a million times. But this system, this breakout strategy on the system, I've been using for over 33 years. It's worked for me, and in all likelihood, it'll probably work for you, because we trade three ways. We trade with the trend, we trade in a range, but then we trade on breakouts, and breakouts are probably one of the most fun things to trade with, besides perhaps overbought, oversold trades, where you actually looking to counter trade. And to counter trade, you need a breakout. You need a breakout to counter trade. So I'm going to take you to the charts now. I'm going to show you on the charts how you can actually counter trade, how you can trade on a breakout, and how it will make you money every single time. Just about. Let's not say every time, but most of the time. Don't forget, guys, trading is risky. Most traders do lose money. If you don't like losing money and you don't like risk, guess what? Don't trade. It's not going to work for you. It's probably the wrong thing to do. You probably should go and do some salesman stuff or something like that, or become a doctor or a lawyer, whatever the case. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. And guess what? It's Coffee with Rob, and we're talking trading. Before we go any further, before we move any further, let's go to the charts. Let's show you the system. After the charts, we'll talk a little bit about strategy and how you can actually make some money in the markets, rather than just trading with systems and trying to work with a win rate that doesn't really work, because win rates don't make you money, as I've told you. Charts are 50-50, as I've told you. Every time you take a trade, you've got a 50% chance of winning, but like a coin toss. There's no guarantees. Charts cannot predict the market, and neither can you. These are not predictive things. Charts show you what happened in the past, and it'll probably in all likelihood happen again in the future. Do you know why? Because as human beings are creatures of habit. That's what we are. We're creatures of habit. That's all we are. We're nothing else. We do things over and over again, and that's why it happens again. I'll quickly show you on the charts how this works. Let's go to the charts. Now, here we are on the charts. Now, what I want to show you immediately on the charts, before we go any further, before we even move a centimeter further, is look at that breakout. Now, this is gold, United States dollar. It's fine. Doesn't matter what we're trading. Doesn't matter how we're trading. All you have to understand is this is a resistance I took from the day chart. That's a support I took from the day chart. I draw these supports and resistances in based on if it touches three places, it's a resistance or a support. It works the same for the trend. It's not different for the trend. And what we have here is a nice strong resistance that's been holding for a long time. So gold has been in a range. It's been trading between this 32.50 and a 34.40 for a while, for quite a while. And every time it hits that area, it rejects it. Why does it reject it? Because there's money there, because there's loads of money waiting to be taken in that area, and it forces it down. It comes down to the support. It rejects it and goes up. Why? Because there's loads of money in there waiting to be taken. It goes up. That's all it is. Charts are not you're not trading with charts. You're not trading against maths. You're not trading against algorithms. You know what you're trading against human beings. What do you think is here? What is here is orders, money, big money flows, big money that's being put there. Somebody's waiting to buy it there because that's a level, and then everybody buys it there and it moves up, and it's the money that moves it up. But sometimes the money runs out. In other words, all these orders here have run out. They've run dry. So what happens now is it pushes to the other side, and it breaks to the other side with price, which means there's loads of money pushing it the other way. Suddenly, all the buy orders are taken, and it's flying in the other direction. And these are human beings that are doing this. Now, the best way to trade this, to trade a breakout, I like to be quite greedy, and I like to grab a breakout as soon as it breaks out. In other words, as soon as the candle closes, I like to buy into it and go. I very frequently don't wait for the retest, but the safest way to buy a breakout, the safest way to buy any breakout, is to wait for the retest. Now, what is the retest? What happens is it breaks through a level like this, and then you get a bit of a fallback. You know, that sort of relief moment, that moment when people think, ooh, maybe I jumped in a bit too quick here. And then they wait, and the money comes back, and it retests that level. It goes to that level, and then it bounces out with another green candle and goes up. That's the best time to buy it. Retests don't always happen. They sometimes don't actually occur. So what actually happens is you end up sometimes watching it go into the moon and you haven't got into the trade. So I prefer when you get that first candle to actually get into the trade and go with it. A good example of a retest that has failed might be, I'm sure we had, there's a failed retest, United States dollar, Canadian dollar. Now look at this. You get this breakout of a level. Now, be very careful of these single line resistances. These single line resistances are great, but what might actually happen with a single line resistance is that you're drawing a line in the sand. It's just a line. That's why I draw these blockies very often, because you get a more valid area that it's trading within. But what I did here is obviously I drew a resistance line, which is kind of more solid, and I probably drew it in the 4 hour anyway. But what happens here is you get this breakout and you get this green candle, you think, there she goes, off she goes. And this is why people wait for retest. It comes back to retest. It comes falling down to retest. What does it do? It breaks straight back through again, straight back through the level, and then it goes down, it goes back up, and it actually retests the other way and continues on down. Now that is a failed retest, and then it goes down, keeps on going down, and breaks on down. That's why people wait for retest, because that is now what they try to refer to as a fake out. Fake out? That's a name for something that doesn't really matter. What it means is it didn't work out. Now what happens is it breaks past the prior high, makes a breakout, looks like it's going to go, comes back, fails, and goes back into the level again. Now it's back in this range where it was. Maybe it's created a higher range, and you're going to trade it within that range, which means it's bouncing off here at the bottom now. Now you want to go long again because you've got a closed green candle. That's a long trade back up to that level there. So now you're trading that one within a range very, very frequently. You see now, if you were to trade a breakout on a range trade or on a trend, what I normally like to do is I like to draw a short-term trend in. Not a lot. Long-term trends are great, because if it breaks a long-term trend, guess what? It breaks a long-term trend, then it's breaking that trend and it's going to the upside, which is fantastic, because then you're going to pick up that trade on a long-term trend. But what I like to do is if it's in a range like this and it's bouncing off the bottom support, then I would say draw a short-term trend line in, a short-term trend resistance, just to give you that. If it breaks through that, then it confirms that it's going to the upside, and it's giving you that green candle on the other side of that resistance. It says to you, do you know what? We're actually going to go long now, because we're counter trading that short-term little trend there. There's a little bearish trend, and there's a bearish trend line. It breaks through that trend resistance, gives you a green candle on the other side, and you've got a long trade all the way up to the top here in a range. So there you get the best of both worlds. You get a range trade, and you also get a trend counter trade. Fantastic, isn't it? You get both trades. You don't only trade with the one system. Now you're trading with both on price action here. Now you're getting the best of both worlds. Yes, you're not trading in a trend, but you are trading in a range. And in that range, it's bounced off the support. So you're like, I want to buy that on that green candle, and buy that. But if you just wait for it to break through that short-term trend resistance, give you a green candle, what a confirmation. You've got confirmation of both. You've got it bouncing off the support, and you've got it bouncing or breaking through that resistance and giving you the upside. The same works for the downside, guys. I'm not going to be one of those guys that gives you the example for the short and gives you the example for the long and drags this video out, because that is so boring. You've seen it go long. I'm sure you can swap it around and go short. You're intelligent enough to do that. Most people who are trading are. That said, it's not geniuses that make money. It's not super intelligent mathematicians that make money. It's just normal people like you and me that make money in the markets. And you know why? Because we keep it simple. Because we keep it simple and we look for the best way to trade. So guys, yeah, that's effectively how you will trade a counter trade. That's as simple as it gets. I can go into more detail and I can make more videos about this. If you want me to, leave a comment in the description below, and I'll make more videos about counter trading if you want to know more about it. And if you want me to go into even more detail, with pleasure, not a problem. But don't forget to subscribe, and don't forget to join the members area, just by the way, because in the members area, every day I put out a trade of the day and you get all the perks and all the rest of it. That's always fantastic as well. It supports the channel. Why not? You know, feel free. But anyway, let's talk about strategy. Let's get on with strategy. What is the strategy? Because it's really important to understand that to make money in the markets, you don't need charts, you need a strategy. You see, what this chart does is it gives you that high probability trade. It gives you the ability to take that trade. It gives you the ability to manage that trade and to manage a stop loss. So now you've got that ability. Now you've got all that in place. But now how do you actually make the money? Because a win rate doesn't make you money. I mean, you can win 8 trades in a row at $10 a trade. That's $80. You're in a win rate and you're all excited and you're running around telling your family how great a trader you are because you just win every single trade. And then the ninth trade comes along and you lose $1,000 and you, wait a minute, what's going on here? That doesn't seem to work out, does it? So you've lost one, you've won 8, but you're way in a loss. In fact, you're closing the account down. Be very careful of believing in a win rate. Be very careful believing that charts have a predictive capability. You have to understand in trading that to make money, you've got to understand that you're going to lose. And in fact, you're going to lose half your trades. In fact, no, you're going to lose more than half your trades. Imagine that. More than half your trades. You're going to say to me, Rob, but how can I make money if I lose more than half my trades? Well, it's really easy, actually. You just do this. All you got to do is decide on a business plan. I mean, if you were starting a business, you'd want to have some kind of business plan. It doesn't have to be a 1,000-page business plan, just a business plan. A plan that says, this is what I want to do. This is how I'm going to make my money. This is how much capital I'm going to need to start. This is where I'm going to have my account, and so on and so on. Don't just jump into trading and hope that you're somehow going to make a profit because you did a course that told you a win rate's going to make you money. Don't do that. Have a plan, have a proper plan. Now, I'm going to give you my plan, and if you want to follow it, by all means. If you don't want to follow it and you think it's a load of old, that's also fine. That's totally up to you. Make your own plan, but make sure you have a plan. Because if you don't have a plan, you are not going to make any money in the stock market or trading Forex or crypto or anything else. In fact, you're just going to lose money. That's all you're going to do. The plan is this. What I do is I risk 1% of my account, whichever account it is. So I have different accounts. Now, I split the accounts up because I don't like to have all my eggs in one basket, and I don't trust brokers. I don't trust funded accounts. I don't trust anyone for in that matter. So I keep my accounts sort of split up and safe and whatnot. Some of them are $100,000 accounts. Some of them might be $25,000 accounts. Doesn't matter. What you have to do is decide on the size of your account and then keep the account size on the account the same. Don't let it grow to gargantuan sizes, leave all your profit there, and then wake up one morning and the broker says, hey, so long and thanks for all the fish. That's not how it works. Keep your account size the same. It also makes it easier to manage and also makes it easier to understand how much money you're making or losing in the market. Now, what you do is you say, I'm going to risk 1% of that account on every single trade. And why do I say that? If I risk 1% of a $25,000 account, I agree, it's only $250. But if I take 10 trades, that's $2,500. And if I was to lose all 10 trades, I would lose 10% of my account. If I was risking 10%, I would lose my whole account. So think about that when you're working out your risk factor. Some people like 2%, some people like 5%, some people like 0.5%. What you got to do effectively is find your balance, find the area where you're comfortable with your loss. But it doesn't really matter what size your loss is, because the whole policy is to make more on your wins and lose less on your losses. Now, how does that work? It's really, really simple, actually. What you do is you say, I'm going to risk 1% on every single trade, which is effectively, in this case, $250 on every single trade. Let me show you how you work that out on the charts. Let's go and have a look at the charts again. So we're on the charts here. Okay, we're back on this particular trade here, this Germany 40. So let's say we want to take a long trade here. Let's say we want to take a long trade at this area here. So what you do is you say, I want to buy it. Now, what you got to do is say, I want to take a $250 stop loss. So that $250 stop loss will be at a price of, and then I go look down here on the chart and I say, on the chart, I would say if my price reaches 23,800 here, 23800, then my trade would be completely invalid. My trade would be useless. It'd be invalid. It's not going to work anymore. I'm going to say, I want my stop loss at 23.8. Not because it's far away, not because it's close, because it's invalid at that area. At that area, I'm not going to move my stop loss. I'm not going to touch my stop loss. I'm going to believe that I wouldn't want to take this trade long anymore. It would be over. It would be done. It would be finished. That's my stop loss. Then I've got to look at how much is that in dollars. Is that, well, that's not much good. I need much more than that. How much is it? That would give me $131 loss, and that's not good enough. I want 250. So I'm going to say here, one whole lot gives me $265 loss. $265. There you go. Now you've worked out your stop loss. You've worked out the size of your trade. The size of your trade, because of the size of your account, is one lot. It doesn't have to be exactly 250. It just has to be in that region. And then you also have to make sure that you're making a better win, then your risk to reward needs to be good. It doesn't have to be exactly 2-1, 3-1, or anything like that. It can be 1-1, as long as you're making more on the win than you are on the loss. And then you just go to take profit. You say, I want to take my profit at 24.5 or 24.6, which is achievable. It's over here, 24.6. So that's my profit target. I'll be making $658 for a $280 loss. That's fine by me. That's a fair trade. That's what I'm looking for. Let's go and talk about this a little bit further. So now that you know how to work out your loss, now you know how to work out the size of your trade, now all you've got to do is manage a trade. And that's really easy, because now you have a trade that's in place with one lot that's got a in that case, $280 loss. That's fine. It's close enough. You're looking for a $600 profit. The problem is you're going to go $100 into profit and you want to get out of that trade. You're going to want to click out of it, because everybody does that. Psychologically, that's what we always do. It's more difficult to psychologically work in your profits than to work in your losses. And the whole point here, this is all psychological. It's all about fear. It's all about fear of missing out and patience. You have to be patient. You have to wait for the trades to come to you. You have to take the trades at the right time. And that's really difficult. I understand this. This is really difficult. This is not an easy thing to do. Trouble is, the trade goes $100 into profit. What do? You're $100 in profit. You go, oh, goodness me. I need to take this profit. I need to get out of here. That's green. I need to go. No, don't touch it. Sit in your hands, or take a hammer and smash your fingers or something. Do something to stop yourself from taking that profit. Do yourself a favor. Do this. Let the trade get up to maybe $200 in profit. Even though you got a $208 stop loss, let it get up to $200 profit. Then take your stop loss, move it up to cost. Now the trade's costing you nothing. You know, when you took this trade, it was costing you $250. Now this trade is actually costing you nothing. It's a free trade. Now that you've got a free trade, all you've got to do is say to yourself, right, now all I've got to do is manage this trade. It's $200 in profit. Now don't look at it as, if it comes back and takes your stop loss at cost, that you lost $200, because I know you're going to go into a loss. You're going to move the stop loss away, and you're going to get deeper and deeper and deeper into trouble in your loss. You're going to dollar cost average. You're going to make this trade bigger, and you're going to keep on losing. And if you do somehow get lucky and it comes back to cost and it breaks even, you're going to go, phew, I got out of that trade. You're not going to say, I won $200 or $300. You're going to say, phew, I got out of that trade. But if you're going to a profit and you got green, and then you somehow move your stop loss up and it comes back and takes it out at break even, for some other odd reason you say, oh, I lost $200, when actually you didn't. Actually, you broke even. Phew, I didn't lose anything on that trade, is what you should be saying as well. So now it goes up, and then it goes up even further. Let's say it goes up to $400. Now what you do, let me show you. I've actually got an example of that on the charts. Let's quickly have a look on the charts. If you look at this trade here, this trade has done that exactly. It has moved up to $565 in profit. And what I've done, I've now moved the stop loss all the way up to $462 in profit. I'm only $100 away from it now. And if it comes back, and I've actually taken my profit level and moved it away and moved it all the way up to the resistance level, which is now $770. I'm moving my profit away all the time. I'm not taking profit. I'm going to keep on moving my stop loss up behind this in the hopes that this keeps on going up. When this goes up to that, close to that, I'm actually going to move it away as well, but I'm going to take my stop loss and move it up to the original profit target, so that if it comes back and takes it out, I've actually made the original profit target, and then keep on moving that away and keep on moving the stop loss up behind it. You don't need to get complicated with this. You don't need to go out of whack with this or go crazy with this. It's just, all you got to do is manage the trade and just follow it up. Just remember, if you're in profit, you've got to get rid of that itchy finger. You've got to stop trying to take your profit. Just to use the stop loss to your advantage. In other words, take the stop loss up, trail it behind your price, and just try and take the money. Don't sit and watch charts all day, guys. The more you watch the charts, the more chance you are of ruining the trade. You know that. The more you watch the chart, the more chance there is you will ruin the trade, because you'll be watching the chart, watching the chart, watching the chart. You'll see the profit. You'll see it going into profit. You'll think, I'm going to take that money and I'm going to go. And you're going to get out of the trade far too early. And you know, that's almost more painful than taking a loss. You know, taking a loss is actually easier than taking your profits too early and watching that trade run on and make thousands of dollars, and you've only made $50. You're like, wow, why didn't I stay in that trade? It's actually hurts you more. Don't sit and watch charts all day. Sitting watching charts all day is not good for the health. It's not good for you. Take positions. Do your research on the markets, take positions and walk away. That's swing trading and position trading. That's how we do it. That's how we position our trades. For those of you who are day trading, you can't do that because day trading is really fast and really difficult. Just remember that if you're day trading on 5-minute charts, 99% of traders do lose money there. And I know you think you're going to be part of the 1%, but guess what? You're not. That's not going to happen. It never does. It never will. It's unfortunate, but that's how it goes. You're not going to make money day trading unless you've got a certain type of psyche, a certain type of fear threshold. You've got to be a certain type of person to be successful on those fast time frames. And also, the information that you're getting on a candle on those fast time frames is not really that reliable. Whereas on the higher time frames, you've got really reliable information. But if you do want to know how to day trade, I can give you good advice on that or good information on that, on how to do it. I usually will tell you on the live shows the best way to go about it and how to do it. I prefer not to trade on those day trading. I prefer to trade on the 4-hour charts. Much easier, much better, and it works a lot nicer. Guys, don't forget to join us for the live shows Tuesday and Thursday. Thanks for watching. Until next time, keep your feet on the ground, reach for the sky, and peace out, guys.